All right, take two. It's a bit rusty on getting these things done. Sort of recorded apart there, and then a couple little technical difficulties. So you're going to have to sort of start it over again. But look, it's just going to be a quick sort of look over the charts. It's a funny time of year. Look, I've literally just said all this about 2 minutes ago or 5 minutes ago, whatever. So I'll tick over it quite quickly. But look, it's a funny time of year. And what I was sort of saying is that these sort of periods where we've got these sort of like big swabs of sort of like here we can see bank holidays all over the place. Last week, obviously, we had Christmas and there's big bank holidays and all this kind of stuff. There's two schools of thought with this. One being that nobody's at the desks, or minimal people at the desks, and so then there's a little bits of back and forth, but there's no real big sort of volume buyers, sellers, drivers to get these things moving. The other side school of thought, and this is goes for particularly now while we've got the whole world sort of taking a break, rightly as they should, but even sort of bank holidays through the year, is that there could be nobody to counter the moves. So you could see these moves really sort of extend and run away, and people just go, "No, look, I'm not going to sort of partake in that thing." And I mean, silver is the prime example of this at the moment. So look, we've seen that move absolutely just go berserk. And I was literally just sort of going through the chart a second ago, showing sort of what we have seen previously in terms of these sell downs, because I do believe we are going to, like, without a shadow of a doubt, we are going to get a pullback. I mean, of course, we're going to get a pullback, but the pullback I think is going to be quite drastic. And I wouldn't be surprised if we see 20 or 30%. Honestly, what I was actually looking on the chart a second ago was back sort of previous times where we had these big lead up runs. See if I can get onto these charts here. This was the what I was referencing a few moments ago. And yes, this is back in 2011, back at previous all-time highs, this kind of sort of stuff with it all, or nearing, yeah, I think nearing or at all-time highs. But the point is that the whole sell back came back this far. Okay, that's fine. Let's forget about that. I don't think we're coming back 76%. Look, it definitely could. I don't think it will this time. But the point is that if you look at this move and this run up here that it was having, it was absolutely on fire, moving at the time. When they decided to turn it, when they said, okay, enough is enough, and we said, okay, boom, for whatever reason, whether it be a change in the narrative, whether it be some sort of political thing, whether it be geopolitical thing, um, when they do decide to turn it, you can see drastic pullbacks. And it doesn't matter how strong this lead up was here. I mean, even just in this straight push through here, we're looking at, and this is obviously because we started from down here, so pick a point where you want to anchor it. 182% up from what that August 10 to May in 11. So that's a 6 month period. It's not very long, and it went 182%. When they did decide to pull it back, these pullbacks coming through here, firstly, kind of dropped about 30%, depending how many days and where you want to call your highs and your lows there. Then we had this sort of pullback happen, it's about a month or so later, September here, and this was in 3 days, and it lost 34%. So what I'm kind of driving at with this is not necessarily that you're going to see this great shake of the market into this long sort of dormant period. I think things have changed enough at the moment to sort of say that, hey, look, we're not going to see this period here. But certainly, I think without a doubt that we could see these moves, at least one of these, and then possibly we could see some sort of repeat like this, because structurally things can't just continue at this rate. I mean, look at where we're at here. This is fine. Everybody was on fire. It's all great. It's 182%. Drag along, and then look at what we've just done now. And again, sort of wherever you want to pick your base from, let's pick it from here. What have we done here? We've done, well, almost exactly the same, 176. And this is from April. This was a big sell down there. Um, again, you could call your base from wherever you want, really. Here, it's just emphasizing the point that is absolutely going through the roof. At the time, it was going through the roof. Probably nobody thought it could pull back. It's like, oh, you know what? This is nothing. I think it's only going up to, I'm sure back then, this was before I was trading. But I'm sure back here, people were sort of saying, hey, look, it's going to 100 and all this kind of sort of jazz. It needs to pull back at some stage. Now, as to sort of whether this pullback comes from here or whether it goes up to sort of 84, 90, 92, just picking random numbers there because nobody can tell you how high this thing is going to go. You get a lot of people going, oh, no, it's going to $200. And rightly so, I do believe it will get there. However, I am also, first and foremost, a technical analyst, and then the fundamentals behind it as well. And look, when you get the technicals and the fundamentals working together, this is what can happen. That's fine. But structurally, things can't just go like this forever. It's probing at the moment. It's looking for where are the sellers and that, where are the people going to step in and say, hey, enough is enough, let's take some profit. And similar to like we saw in 2011, I just showed a second ago, it will find that point. It will change. And as I said, it could come as soon as Monday. Could sort of come next week. Could come next month. Who knows? I don't know. But the point is, it will come. And when it does come, I think we're going to see something pretty drastic. And you got to think, look, even if this thing were to turn around and come back here and say this just pulled in a whole top here, I mean, this is an incredible day. I mean, come on, 10%, $7.40 in one day. Excuse me. That's the biggest dollar move day, and I don't have time to go through everything here, but probably close to one of the biggest. Well, let's even just have a look at this. Just a random here. Okay, maybe this one's a bit bigger here in terms of. What's this one? That was about a 12% day here, wasn't it? So yeah, maybe more in percentage terms, but certainly in dollar terms, I don't think silver's ever moved like this. And I think it's important to note where this move is, because with these kind of moves, you can expect to see them on this candle here. You can expect to see it on this candle here, and even to a certain extent, this candle here. Because what people will do is, like we had this top here, came up here and tested it. So here's the top, start to come down. That's great. People load up their shorts. They hammer the shorts just above this point here. Sorry, there's stops for the shorts. There's stops for the shorts. They'll come here. Comes up here, tests them again. Oh, great. Look at that. Double top. Bang. Here we go. Even more people get on board and short and short and short. And what happens is when this actually comes up and breaks through here, that feeds this move. Because all these sort of people that are short through here thinking they caught the top, when they had basically in their own mind confirmation, which I also thought as well, confirmation of the second double top here. We were looking at that bottom, at this the bottom over here to sort of work out a sort of target down here for a double top. Turned out to be a cup on the handle. Well, what happens? They blast through here, and that feeds these moves to go bang and sort of move up like this. So you can expect to see these expansion moves when you come out of consolidation, because the same thing's happening here. Okay, we've had the breakout, we hit the stops, now it's going to come back down. Excuse me, come back down. What do people do? They put the stops above the area, boom, it feeds it. So on and so on. What you don't tend to get is just in absolutely out of nowhere at the end of a range, end of a trend, a move bigger than anything you've ever seen ever before. It's just an odd place for this candle to be. And this goes to what my initial point was when I sort of started this, was that there's nobody to counter this move. And I think that's what we're sort of seeing at the moment. And that's fine. This can run, and look, it could still continue. But when people sort of get back to the desk and they go, hold on, wait, what happened? I was here, now all my profits up over here. They will run for the door. And that's when we'll get this move here. So I do think this move will come. I can't say that this is the top. I don't think anybody can. There's no technical levels. There's no technical analysis that can tell you where this thing should be going from here. It's broken all levels of what's actually sort of applicable in terms of technical analysis. You just need to wait for it to happen. And when it does happen, it may get 1 or 2 days or 3, a couple of fails at the top, and then it comes like this. But I do believe we will get this pullback down over here. So, it's something to sort of, just bide the time with, and when it comes, it comes. I mean, have a look at gold-silver ratio. This thing has just been absolutely melting. Honestly, it's actually lower than I've ever seen it. Where are we at here? So we're tipping back down to August 2013. So, yeah, super low levels. So, look, it could continue. Maybe it comes down to 50. I don't know. I guess, not too many people can sort of say with this, but certainly when this broke that 14-year trend line, it just gave it up and just kept giving it up, giving it up, giving it up, giving it up kind of thing. So yeah, that's really sort of melting down at the moment. Anyway, that's just a quick sort of thought on silver. Gold, let's have a look at this stuff. Gold, let's just wipe a couple of these charts. So what I'm going to do, I'm not going to sort of redraw all the charts and sort of redo everything right now because it'll take too long, and this time of year, it's not really sort of going to be overly worth it. So I may sort of do a bit more of a yearly review and yearly cap, and maybe sort of plug in some major levels along the way there. But let's remove 109 of those drawings. Bang, done. What we will sort of see is that when we do redraw these things, if the levels are there, they'll be there again. It does. It's like it's one of these things. You like it's got a lot of history with these things. Some of these things, that silver one I got rid of before had like 500 drawings on it or something. So yeah, it's interesting, particularly when you're very heavy into technical analysis. It tells a story, and it's quite an interesting one. I mean, there's obviously highs and lows with these things, not just the actual chart itself, what it represents to you, but these things will re-emerge should we sort of see them. Should they still be there, so I should say. Anyway, point is, quick look at gold is that it's obviously sort of lagging silver a little bit in what silver has been doing. So silver has obviously just blown out the top of it all. You can't fault gold. I mean, gold has had a spectacular year by all accounts as well. But certainly, sort of while we're seeing silver just really fly out the moon, and this was showed by the gold silver ratio, while you can see that sort of silver is really taking the lead on this, gold has just been puttering along. I mean, look, very tight little sort of ranges, not anything like these big sell-offs here. This is just an example as well. What did gold came down? 11%. And for gold to move 11% means probably equivalent. Like silver will always move more than gold in terms of percentage wise. So, a representation of sort of gold coming down 11% is probably closer to 20% or so in silver for what we could see. So, again, it's at an all-time high, broke through this part. This is what I was talking about before. This is when you could expect to see those expansion moves coming up like this and moving out like that. It finished the week on a bit of a high. Good on it. I do think it's going to have a little bit of a cooling off as well. So these things, as I said, there's no point necessarily getting out there and betting the farm on it on Monday. But wait to sort of see what happens with it all. But I wouldn't be surprised if we see some sort of profit taking maybe into the first week, 2 weeks of January. Interesting sort of thing I noticed the other day, apart from the fact that this is a new thing that they've got on TradingView at the moment, was it the seasonals, technicals? No, maybe the seasonals. Can we get this on a block here? Maybe this one here. Here we go. I thought it was quite interesting. Green every single month of the year. That's crazy. 72% it pulled on the year. Can we just flick straight to silver for that as well? Silver, a couple of negative months at the start, as you can see, it's down 3%, but 174% of the year. So you can really see that silver has taken the lead by far over gold there. All right, and we get back to the chart. Boom. Not this gold one. This is the gold one. Cool. So where to from here? Look, again, this is not the point of the analysis today because you could say, hey, look, it's going to pull. If you were saying in normal technicals, what you would be looking to do would be looking for some sort of pullback down here, retest, attack these highs, move up high. That's what you would be so saying. But given the time of the year, what's going on, everything that I've sort of mentioned prior, look, it could just be up here. It could be at 4,800 or it could be back down at 4,200. Most likely not back down to 4,200. But in saying that, I don't see it going to 4,800 as well. So I would say we'll probably start to see a little bit of a cooling, a little bit of a rounding. I don't expect next week to be the same as we saw this week. I could be eating my words, sort of come the first week of January, but that's okay. I mean, that's the point. This is the time of the year for it all. So, yeah, it's not a great deal we can pull out of that there. Flip along, we got DXY. Now, when I was trading DXY just before going away, I was looking for potentially this little range to be forming up along the top over here. A couple of little takeaways for myself on this was that I originally had, where was it? I think it was this, was it? Okay. Can't remember where the chart. So this isn't the most enthralling video here. Maybe it was something along this level here. I think it was because I remember the reaction of this, and I was like, "Oh no, no! Look, we'll change it because it matches up with these ones here." How did this go? Yeah, that was kind of maybe the chart that I was looking at. Anyway, whatever. Point is that I gave it an extra chance. Should not have listened to it. However, I thought, look, we could potentially be seeing this little range here. Went for a moment, and I would say that this is the 10th of December. Off the top of my head, I would say that is FOMC, and really all it took was one line from Powell to really seal its fate. And as you can see, we had the sort of two levels in which it could potentially move. It being the range, I thought, look, if we could get on here and if he could sort of come back out with a little bit more of a bullish, sort of bit more of a sort of hawkish stance of it all, we could have seen this potentially turn into a range. Obviously, price target up around 101. The downside was this move that we actually saw play out through here. This obviously had that gap back here around that 61% mark of the move off the lows. 61% seems to have bounced and held, closed the gap. This could be something from here because, as I said, gaps very rarely sort of ever stay open indefinitely. We had one from the other year, stayed open for I think 6 to 8 months or so. Like maybe not last year, the year before, can't remember. Anyway, can't be bothered finding it now. Point is that this gap was always going to be a bit of a magnet. We had a little gap here, closed it, and then boom, ran back down over here. So what can we look for now? Well, the fact that the gap is closed doesn't mean that the bottom is in, but it means that that job is done. So you can cross that one off the list and say, hey, look, you know what? This was the magnet. The magnet is now filled. We've closed the gap, or within a pip or whatever. You could start to see some sort of rebalancing of this move here. But this is always a bit of a shame, but let's do it. And work out what we could potentially look for, or what we could definitely sort of say would be a move through this line here. I'm not going to bother sort of going through and making anything sort of ultimately too fancy, but this would potentially be all I'd be sort of concerned about, probably breaking above last week's high, well, sorry, Friday's highs, getting above 98.73. To be above 98.73, I don't really think you got too much going on. So it could definitely potentially still keep traveling down this little pit here. Break Thursday's lows. Is that Thursday there? Yeah, Wednesday. That's right. We didn't have Thursday, did we? So break Wednesday's lows. Well, back down to these major levels down over here. And as I said, given the type of things that are happening this time of year, very much a possibility. We are seeing a little bit of a sort of negative divergence, though. As you see, it really came down, took out the lows here, closed that gap that we had previously marked out over here. So we closed the gap. Slight bit of a negative divergence. This is on the daily. I wouldn't count it out. And this is what I'm saying, that I think eventually once these things do turn, I think all that metals profit, whether it's sort of over a week or a month or 3 months or whatever, I think will spill back into the US dollar. And I don't think we're going to get, 88 necessarily in the first half of the year. I think there's a better chance of this thing moving up a little bit higher past these zones over here before we sort of see it sort of break to the bottom side and say take out 95s. Once you do take out 95s, I'm not saying it can't happen, but I'd say just in the short term, we may see a little bit of at least a bounce effort to sort of come back up to these areas over here. Actually upgraded to the to the trading view with 100 alerts. As you can see, none of my alerts get wiped, so they're all just sit there and looks slightly insane. So it's something to sort of clear up in that over the year. Anyway, look, as I said, again, nothing overly profound with this other than sort of like if we do get above this little level over here, let's put an alert on that one. So that's our little downtrend channel. We've got a little bit of a negative divergence. You get out of this channel, you're going to be targeting 98.74. Above 98.74, well, okay, yeah, 99.20s, so on and so on. But as I said, I'm not going to really be going into sort of making the whole chart and drawing it out at this point. This is merely just a bit of a sort of a chance to wipe the charts, have a little bit of a look, and then we can really get stuck into things back in the new year. Speaking of which, we got Aussie. What a recovery from Aussie. The 64.20 just will not die. As you can see, this is a level that I've had marked for a long time through here. And I said, this is its line in the sand. We had a little bit of a triangle. We had the breakdown. I said, this is why I said at the start is that, I don't know if I said it on this one or maybe it was the previous video, that, a couple of weeks away in Hawaii, but it was good, but I don't know how much it was deserved in the end there, because I was hammering the short side of Aussie, and I even said as we come to this point, technically you don't see these big expansions here. Well, what's happened? It's gone right from the lows right back to the tops, taken out the highs, so it's a yearly high here as well, coming into the end. And yeah, we could see this thing sort of potentially continue on. I don't think it will. I think it'll come back down here, maybe a reload, then go higher. Again, this is just me. If we see the US dollar catch a bid, Aussie's going to suffer. Aussie has not performed well enough, given how weak the US dollar has been, to justify it back up to the 70s levels at this point. When we see US dollar get a bit of a rally, I'm looking for a deeper sort of contraction, sort of pullback on Aussie. Have that sort of little hurrah of the US dollar run, then see that really start to sort of tackle down towards 95s and then break that 95 level, move down towards 90. Should that happen, then we'll see Aussie move up to the top side, in my opinion. But I do think that, you could see some more upside here. But again, it's a funny time of year. What can we really sort of say about it? All we can do here is just wipe these charts and just keep doing that. And sort of say that, okay, look, it broke through the highs, so you can't fault it on that regard. Use the highs. That's where you care about if you're caring about the lows. Whoops. Which obviously aren't really an issue at this point in time. But, while this is above this level over here, you see almost this was a little bit of a fake out move down here as well. But still, I would say till you're actually underneath this level here, then it's going to be buying dips. But in saying this, I wouldn't be shocked if we saw a move back down to say 66. It could set up a little bit of a head and shoulders over here, which then could get us back down tackling these levels over here. It's just I'm too much out of the game for the last couple of weeks to sort of really make that call of it all. I mean, RBA, from a sort of fundamental point, RBA, we seem to be done with cuts. And not only done with cuts, but I saw sort of headlines the other day, for what it's worth, which I say it like that because it's not really worth too much, but headlines saying that the people are locking in their home loans because the rate hikes are coming. Globally, I think that may be the case. I think it's probably a little bit premature. I mean, RBA is very slow to act. They're notoriously slow to act. I don't think they're going to go from pause to cut to pause to straight to hike. I think they're going to sort of go with a bit more sort of wait and see attitude, as they typically always do. But wait till that quarterly CPI comes out. When the quarterly CPI comes out, that could be the trigger, and we could see Aussie certainly appreciate further up. If we get the combination of the Fed continuing with their cut cycle, so you've got Powell finishing up in May. You got, I don't know, is it confirmed? Hackett, whatever his name is, who's very dovish. If he sort of goes in and he gets free reign of it all, and he does go what everybody says, where he's going to be sort of straight onto the cuts. Well, yeah, definitely. Aussie could be up over these levels up here, and this is what we're going to be planning for. Like this, as I said, this isn't the analysis of all analysis right now. This is just a quick touch base, get back to it, wipe the charts kind of view. But these are the things we need to be looking for this year. You know what I mean? Like sort of like while things are taking out highs, that's a tick on the technicals. If we see the Fed continue with a more dovish cutting kind of thing, we see this Hassett guy coming in, and we see the RBA sort of stand a little bit stronger on the hawkish side of things, and we see the CPI, particularly the quarterly, come in high. Well, yeah, definitely. I could see 70 cents on Aussie. Why not? So, that's just the way to. As to sort of now, I wouldn't be surprised if we do come revisit. I don't think we're just done with this area here. But again, only I'm eating my words next week. So China, wow, this one is one that sort of really has been a bit of a headache of that ever since April. That blow off on April, which was just crazy. And then it's been a one way show since. Where are we at? Bang. 5%, which you kind of go, yeah, 5%, that's not too much. In terms of the yuan, that's a big move. And it's a big move in one direction. There's just never really been any sort of reprieve. We broke this big trend line here. It danced around it a little bit. This is what I thought sort of a gold silver ratio may have done a little bit more of, danced around it a little bit and then sort of given it up. But gold silver ratio just dropped like a stone through it. But here we sort of got the break, the retest, and then dribble, dribble, bang, bang. And as you can see, nothing has held it. We do get that reaction off the 78. That was about the time that I was leaving. I said, look, we'll get a reaction here. Can it continue? Couldn't even do that, and just boom, 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 boom. So we are sort of still looking like it probably wants to come down. I said sub 7. I think we just got sub 7 the other day, didn't we? So we're looking potentially of a continuation move down to say 697. But once you get back down there, I'd expect probably a faster sort of reaction. Something maybe not necessarily to this extent up over here, but certainly a move back up to say 709, which, if we see that, gold, silver, Aussie, they're all going to take a hit. Keep that in mind. That sort of this is one of the big drivers, in my opinion, anyway, or a big sort of tell that this has just been incredibly weak the whole way. And what's been happening? Well, at least in the metals market, that's been going through the roof the whole way. So I think if we sort of see a little bit more downside here and we see a big reaction from this level down here, I would be looking to book profits on metals longs. And finally, we just got copper. Comeback story of the year. Oh, wait, 2 seconds. Let's continue with this thing. Remove all the drawings. We'll come back to this. Copper, unbelievable. The comeback resilience of this after this drop down here. I've stayed clear of this for a long time, and rightly so, because I thought it'd come back down here, and that was another one that was deadly wrong. So, look, the start of the year was very good. Middle of the year, a little bit tough. 3/4 of the year, very good. End of the year, a little tough. So it has been a very turbulent year for myself, but that's okay. That's the game, and this is why we do the analysis to sort of look at the sort of glaring holes that we may have and how we can plug them, how we can change them, and how we can absolutely destroy the year in front of us. So that's the main sort of goal. But anyway, the point is here we got sort of copper come this absolute sort of bloodbath, 21% in one day. That is just insane. Anyway, it's made its way all the way back up over here, and it's retesting all-time highs with all other metals. So metals, certainly nothing can go wrong, or they can't do, anything wrong in their eyes. However, these moves don't always last forever, of course. Copper is a perfect example. While this thing's been ripping and ripping and ripping, and then it gets absolutely demolished. Ripping, ripping, demolished. People are there to make money with these things. And yes, you can say there's a fundamental sort of, supply shortages, demands going through the roof, and that's fine. But end of the day, people are also there to make money. It doesn't matter what part of the trough they're at, they're there to make money. And if you put something up valuable enough, I think people will sort of say, hey, what do I want more? Do I want this thing or do I want the profit? I think you'll get large segments of these things. It'll take profit, and then we can see it chug on higher. Ultimately, this is still moving, respecting this large upward trajectory here, despite all the up and down garbage. But the point is that sort of, as bullish as these things look, they do turn, bang, and they get absolutely clobbered when they do. This thing's up 50% through here. And then it gave back 23%. Not including this, which was like tariff day. This was, I can't remember what was happening. These are also tariff related sort of bits and pieces. But the point is, and this is what I keep sort of stressing with it all, that, as bullish as things seem, and as much as they're just going through the roof, structurally, things do not go straight up. They inevitably something happens, whether it be a sort of a change in sort of narrative or some geopolitical things, whatever the reason may be. whether you believe the reason or not, something will come up. These things will turn. Who knows? Maybe it's Ukraine, Russia chilling out. Maybe it's Venezuela chilling out. We'll go through and I'll do a bit more of an analysis on this kind of stuff. But point being is that yeah, a lot of these things, if you're in them and you're longs, you've done incredibly well. Take the bank, or at least sort of what I'll be doing is lurking. I'll be waiting on the lower levels because I think next year is also going to be a big year. But I'm open to the idea of these things getting absolutely clobbered in the sort of short to medium term. All right, that's it from me.